Well, that pretty much outlining the day that was on Friday. What are your expectations for the week ahead as we kick today's trading session off?
I think we're fairly well supported. We've got extremely low interest rates now in the government of Kenya curve. T-bills crash below 3%. That's a negative return. And I think we're seeing a sort of domestic macro allocation which is going to gain traction, where people are going to switch out of the bond market into the equity market. So for now, I think it's well supported. The risk remains domestic, a la what happened that Sunday not so long ago. And I think if we get something like that, that's going to put people on notice. But otherwise, it looks well supported.
To what extent are those political noises a concern for you, and because of the impact it could possibly have on market activity moving forward?
I think the entire risk to this spectacular 2010 rally, where we're the top performing equity market in Africa, is all to do with ourselves and with the political risks attached around the referendum. I'm entirely unsure at this point that the yes camp can carry the day, and I think the markets forget the merits of the constitution. The markets want a yes vote. It will be seen as a green light, a step forward after the previously failed referendum. And I think that's where the current risks reside entirely. The fundamentals are strong. We've had a strong first quarter, and I think we've released the stranglehold at the bottom of the pyramid. So really, those conditions are very strong. And I think even Citibank, I read a report, we're talking about incipient signs of a boom. There are incipient signs of a boom, but it's all to do whether we can take the second bite of the cherry and move on.
Well, with that being the case, consensus seems to be for a steady rise in the rate of returns from equities, with the message out there certainly seeming to be the time to get on board is now. With that being the case, Aly-Khan, how are you playing the game at the moment?
I'm playing it a little bit more cautiously than I was at the beginning of the year and at the end of last year, when I think it was an absolute no-brainer. I'm playing it a little closer to my chest. I'm trying to be a lot quicker than I would have been. I'm not so committed to the macro trade as I was. But having said that, I still I like a lot of the counters. I still think they're pretty cheap, but I'm not going for the more speculative type of counters, because I think when it unravels, it'll unravel there first, and you'll find it very illiquid. So I'm staying with the liquid counters, looking at the big caps. And looking for that rising tide.
Well, let's look at some of the counters where we know a lot of speculative trade has been surrounding. KPLC is one of them. I mean, I was talking about it earlier, the fact that local institutions are showing interest at the 200 shilling level because of their rights issue that's now imminent. I mean, what's your view on the counter on a fundamental basis?
Well, there's so much balance sheet restructuring about to go on. It's very much, falls into that Donald Rumsfeld, there are many known unknowns. And I think clearly the message that the market is sending is that shareholders on record actually feel that it's going to be a very optimal outcome for them. That might well be true. And I think domestic investors especially are now beginning to take bigger and bigger bites out of this 200 resistance point, which probably signals a move higher. But for me personally, I'm entirely unsure as to what the ratios are going to be applied, the degree of dilution, and the three legs of this exercise as to how they're going to play out. I think on the charts you can go to 260. But I think it's highly speculative without that information to which I'm referring.
On that speculative basis, as I said, it's local investors that have been pretty active on that counter. From foreigners, we had increased activity on KenGen, and that on the flip side. I mean, we've had foreign investors dominating the purchases on the counter during Friday's session. What's driving the interest there, and how is KPLC and KenGen stacking up against each other at the moment?
Okay, interesting question. Very different companies in terms of what you're getting into.